Okay, ladies and gentlemen, so what I'm going to talk about is the 4 M's of trading. I hope you can all see that. I'm just going to draw this out and you're going to find out why I'm a trader and not an artist. Okay, so we've got 4 sort of interconnected circles here. First one. So we've got the 4 M's of trading: markets, method, money, and myself. These are the 4 areas. And this is the kind of 4, let's call it like holistic, strategic, overall, high-level view, however you wish to call it. These are the 4 areas you need to have covered in terms of being a consistently successful, profitable trading business. Because it's when all of these 4 areas come together. There we go. It's when all of those 4 areas come together that we start to get almost like a sweet spot, okay? And it's that sweet spot that's going to actually help you either A, improve your trading, or B, move you towards a level of consistent profitability. So once again, it's markets, method, money, myself, the 4 M's of trading. Okay, so the 4 M's of trading. First one we'll talk about markets, okay? Markets. What do I mean when I'm talking about markets? Well, we know these days that there are hundreds, almost thousands of different instruments that you can trade that are offered to you by various brokers and that you can engage with, okay? That are based under sort of several smaller headings. You've got equities, okay? The individual shares of a trade. You've got the indices, the equity indices. You've got the commodities, the hards and the softs. You've got the foreign exchange markets, and you've got the bond markets. And within those groups, you have literally thousands of different instruments you can trade. But it's important to know, are you trading the right instruments based upon your risk profile, your lifestyle, your character, your size of your trading count, and actually your goals and outcome. It's about knowing which are the right markets for you to trade. That's very important to know. The other very simple thing to know, but crucially important, is to understand whether your market is in a trending environment or in a range-bound consolidation. What do I mean by that? Well, a trending market, very simply, invariably, the nice ones, they do that. They just trend up nicely with very small pullback. And that's a trending market. There are lots of different ways you can define whether a market's trending, but quite literally, if you're looking at a chart, it should leap off the page at you. The other side is that market range bound? Is it consolidating? Maybe the market's just doing this. It's in a tight, small range, okay? It's just important to know whatever your market you're trading, is it trending or is it range bound? People love to trade trend following or trending markets, but the truth is the vast majority of markets spend more of their time in a range bound consolidating environment. And it's important to know which market you're trading. Is it trending or is it consolidating? Because that will have a big impact on the next stage, method. So we looked at the first of the 4 M's of trading, markets. We had a look at, is the market trending or is it range-bound consolidating? Now let's talk about the second one, methods. What do I mean by methods? Well, this is the bit that everybody loves, okay? Everybody loves a nice strategy. You go on the internet and Google for different types of strategy, you'll find thousands. When you meet other traders, they all want to talk about your method. How do you trade? Where do you get in? Where do you buy? Where do you sell, okay? That's what everybody loves. But strangely enough, ladies and gentlemen, actually in some respects, it's probably the least important, okay? Especially getting in where you buy. It's normally more important to work out where you're getting out. Where are your exits, okay? So we talked about in the markets understanding, are your markets trending or are they range bound? Well, it's also important to know that, what is your method? Is your method one that follows trends, Or is it 2, one that works better in a consolidating range-bound environment? It's very simple, really, when you think about it. If you use a trend-following method, but the market is doing this, the likelihood of you making any kind of profits is very, very slim. Alternatively, if you're using a range-bound sort of trading strategy, buying and selling levels of support and resistance, and the market's breaking through levels of support and resistance and actually just either climbing to new highs or dropping to new lows, if you're using a range-bound strategy, you're going to struggle. So this is where the pair of them start to actually complement each other. You want to be trading the right method for you, for your personality, in the context of the right market environment. Very simple, really, when you think about it, but you'd be surprised at how few people actually do it. The third of the 4 M's of trading, ladies and gentlemen, let's talk about this one, money. We've covered markets, we've covered method, we've covered money. What am I talking about? Primarily I'm talking about money management, risk management. What I would suggest is for newbie traders, this is the area you need to be focusing on the most. If you've had a little bit of struggles, if you've had some challenges and you've been trading, I would suggest this is what you need to focus on. You always need to focus on money management. You're always managing risk. So what do I mean by money management? Well, there's a couple of levels. Starting at the sort of grand level, understanding, are you really capitalized enough for your market, for your method, and also for yourself in terms of your own trading goals and outcomes, okay? If you think you're going to turn, $100 into $100,000 over the course of the next couple of months, the likelihood is that you're just sort of deceiving yourself. Anything is possible in the market, but the probability of it happening is actually very, very small, okay? So it's about recognizing, are you capitalized adequately and rightly for what you're trying to do? Once you've worked that out, then it's about working out your risk profile, okay? Your personal risk profile. Everybody has their own particular risk profile, and you'll sit on a spectrum between being risk averse at one end and risk accepting at the other. Only you can know the answer to that particular question. Once you've worked that out and determined that out, then we're starting to get into understanding, well, what about my portfolio risk, okay? How much of my portfolio am I going to risk at any time? How much am I going to risk on any one particular instrument? And then moving on finally to, well, how much am I going to risk in terms of my money on one individual trade? A very, very simple pair of guidelines that I tell people to do to ensure that they're managing this correctly is invariably 1, never trade without a stop loss. 2, never risk more than a small portion of your account on any one trade to ensure that even if you have a losing trade, you're still able to come back the following day, learn from your mistake and get better as a trader. So remember those 2 guidelines. 1, never trade without a stop loss. 2, never risk more than a small portion of your account on any one trade. So that's money management in a key. It's, as I said, it's probably where the prime focus should be for any particular private trader. It's about managing risk first. Let the profits take care of themselves. Okay, ladies and gentlemen, so let's talk about the 4th M of trading. We've covered markets, we've covered method, we've covered money. Let's talk about the 4th one, myself. For, let's say, inexperienced or newbie traders, that very often they are surprised by how important this actually becomes to a trader. Many new traders are completely and utterly ignorant about how managing myself or managing yourself is key to actually bringing all of these aspects together. What do I actually mean about that? Well, strangely enough, it's actually immensely important for you to be taking care of your health, okay? For that, you can have basically your physical health, making sure that you're active, okay, and that you're in a good place to handle stress, because you are going to experience stress as a trader. It's also about understanding your emotional health, okay? Understanding that, not only do you risk financial capital, but you will also risk emotional capital when you're engaged in something like intraday trading. It's also important to understand your financial health in terms of linking into this sector, the money, understanding your financial health. If you're sat down trying to trade in order to make money to pay off debts and to pay your rent and food checks at the end of the month, you're in a bad position already. My top tip is don't do it, okay? Take a good look at your financial health and put yourself in the right place to be able to trade well. And then finally, what you might also have is maybe your mental health. What are you talking about in terms of the way you see yourself as a person and as a trader? What are the images that you conjure up about yourself as a trader? What are the way you talk to yourself as a trader? You shouldn't underestimate the importance of that and actually how a negative mental health will manifest itself in its trading. What I also like to talk about is about understanding support structures. Okay, being a private trader, it is a lonesome endeavor. I know lots of people sat at home on their own trying to do their best as a trader on their own. We're sociable creatures, okay? We need to be able to interact with other human beings. So don't sit there all on your own. It's important to build the correct support structures around you to help you achieve all of these 4 M's of trading, okay? So if you're sat at home and you don't know anybody, make sure you go out. Make sure you attend other trader networks, okay? Meet up with other traders, okay? Chat about your trading adventures with other individuals, okay? I guarantee it'll help you. It'll help you in terms of managing yourself. Support structures. Maybe you want a professional support structure. Maybe you want a mentor or a coach to actually help you with your education, to help you with your development, and maybe guide and even stretch you as you move further forward in your trading journey. There are many mentors and coaches out there. All I suggest is that you do your due diligence and find the right individual that's perfect for you. Other support structures that maybe you haven't considered but you should are even things like, does your partner support you in your endeavors as a trader? Does your family? Do your friends? Okay? It might sound a bit glib or it might sound not important, but I can assure you it is. It's important to build these support structures that allow you to help you manage yourself better. Because when you're in a good space, I guarantee all the other elements will start to come together much, much quicker for you. As I said, private traders very often just are ignorant of this area, ignorant of their own psychology. But as the more you trade and the more you have experience with engaging with the market, the more you'll realize how important this is. So make sure that you're building those support structures to help you become the best trader you possibly can be.